just went out. So if you received your stimulus payment, and you did not say that you received it, you said I didn't get it. Because some people realize, oh, you won't give me credit for it? I ain't get it then. This is a system. The automated letter went out and said, yeah, you got it. So now give us our money back, and here's your penalty.
So could you say, just if you don't, this is just a
Let
hypothetical.
me fix this.
Let me say my hypothetical situation because I'm sat here and I thought about it, so I want to say it.
Okay.
If I say, okay, just say that I got it, and then come like Mariella, let's say I got it the next day, or maybe I never got it. Can I go back and amend that year to get it?
You wouldn't have to because they can see if you got it or not.
And they would just send it to
They
me.
would likely just
Oh,
send it.
okay.
They'll credit your return.
Okay.
Usually what they do is they send that letter saying they're gonna be sending you such amount. And then
We
they send it.
adjusted your tax return for blah, 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 blah.
Okay.
So it's just better if you received it, you could have back then your children, you're gonna turn 17, and you're basically gonna ask for the money back essentially.
Oh.
So if you already got it in the bank account, and they're gonna say, okay, he's not longer a child, I'm gonna qualify for the child.
So they would have to turn 17 after December 31st?
On December 31st.
Yeah,
On December 31st.
40 year calendar year tax year. But the thing that we tell our clients, so the one thing I was stopping you on, Monique, is we're not hypothetical. Like we're not, what did you do? We don't want to hear what you think you did. We're trying to put this tax return, our name is on it. We want this return to go through as positive as possible. So we're asking you, did you get this money, did you not? We're not asking you to tell us, well, I got it, but just put it on there anyway. That's not what we want. We need you to be very clear. Can you go look at your bank account? That's what I did. I said, can you go look at your bank account? We have online? Because I don't want my name to be we have P10s. And every P10, every tax return, your P10 number sits on. That means whatever happens with that tax return, that's showing up under your P10. So you're not helping yourself because when they start seeing consistent behavior like that, you get audited as a tax preparer. So you don't want that. When Birdie was well, my name on that tax return. I didn't do
You
that.
don't even talk like that.
That's-
Birdie, I got you. He is say it a little slower.
The point is, that's why everybody's like so on edge about their name being on the return. And so I know it's been plenty of times that someone did an extension and I went behind them and did the return. And I know y'all saw your name on there, but I was like, I did the return, you're okay. Yeah, I did it. If I did it, you're okay. But we shouldn't even do that. It's important. I'm a person of character. I'm not putting nothing on this tax return that I'm not going to be responsible for. And if I can get you to get to the best place possible with the correct information, that's what I'm looking for. I'm not looking for hypothetical on your tax return. I'm looking for what does this W-2 say? What does this 1099 say? Even when they fill out their business expense sheet and them numbers even, what do I tell y'all when they bring me even numbers? Give it back. I'm not doing that. I'm not putting that on the tax return. And if they insist on putting it on the tax return, my name won't be on it. Well, I'll just click self-prepared and you'll pay me for it, but I'll click self-prepared and give you this tax return. Or you can fill out this information that says that I told you that wasn't gonna work. But I'm not putting my name on that, so it's nothing that we do in this particular environment will be hypothetical. Fill this form out, let me see the documentation, is this correct? And I'm good with saying, the client say, well, would they really look at it? Well, you don't know what your mileage is, do you roughly know what your mileage is? And they'll give me a rough number, it'll be even. I was like, I'm not putting an even number on there. And they'll give me a better number, and I'll say, worst case scenario, and we had this conversation. Worst case scenario, they audit you for these miles. Worst case scenario. Can you prove this to a certain degree? If not, they're gonna put that money back in the income. But I don't want my number showing up, and you guys shouldn't either. If you work under me, you do not want your number showing up, because if your number show up too many times under me, I'm throwing you under the bus when the authorities come to me. I'm gonna show this video and say I taught you better.
Oh, P100257? Oh no.
But believe it or not, that's your license, and they do. I actually did get an audit. I got an audit because of mileage, And, I could see why they thought it was an issue. It ended up not being. In actuality, the 3 clients that I had, they ended up, the IRS ended up paying them more because we didn't take all the mileage. One of them was a landscaping company, and he actually owned all his own cars, and the guys would come and drive his cars, his trucks. And he was Sugarland, Pearland, he lived in Richmond, and I mean, they were just all over the place. And one of the vehicles, I forgot what happened. One of the vehicles, I think I forgot to put the mileage in on it or something like that. But we had to show proof of the vehicles, give that information, and then we had to backdoor it and, provide, a schedule of when they were going certain places and what they were doing. And it turned out that it was more than less. And the other one was a truck driver. And he actually went, in and out of the, state, but he did long haul, which is it's not as usual as you would think. He's like, literally, he leaves and he wasn't coming home for 3 months. So it was nothing but on the road, and none of that was personal miles, it was 18 of them. So, I've had situations, but they did audit me because it kept looking like I was having these crazy miles. But that's when I learned how they do it. They actually, your PTN is in there, and they're deeming everything you do. So these companies that y'all hear go out of business, there's somebody that went in and they found a button to push. They don't even know what the button doing. They just realize if I push this button, then you get $5,000 extra. Okay, well, I'm getting all my clients $5,000 extra. Come on, y'all, I'm gonna charge y'all $900, but I'm getting y'all $5,000 extra, and they push that button. And they don't realize it's a digital system that's saying, so all y'all had the fuel tax credit, all y'all. Like, it'd be something crazy like that, and they're not paying attention to what that is.
You filed under that PTN.
Yep.
And they do audit you based on that.
Mhm.
I will say that everyone's doing a really good job of getting the questionnaire in. So when a client calls and I pull up and see their questionnaire, if they say, oh, the IRS says I owe blah, 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 the first thing I do is look on there and see, like Vanessa, look on there and see, did they check that they got that stimulus? And I can put it right back on them. No, ma'am, that's yes, you owe that money.
Yeah, you said, no, you didn't get it. You said, or you put the wrong amount.
I didn't say that. It's your, that's why they need to fill it out, not you. They fill it out.
Well, they know that we don't fill out the form for them.
Yeah.
and
They know
that's
this your
something-
handwriting, ma'am. This is
That's
what it
something
says.
that I noticed that, Block doesn't do yet. They asked me and they saw my form, but they haven't put that in place yet. I don't understand why. That's like the most important thing to me. Because it tells exactly what happened. I didn't see it where I was on.
They don't even have to pay nothing.
They probably have to pay for that.
If they ask me again, they will. But I realized that, we had a client came in and said they had, 5 W-2s and I only put in 4. I missed one. And so it goes both ways. It was in their favor and in our favor. So, anyway, okay, so here's where you say that someone else can claim you. And like we were talking about the spouses, if one spouse itemizes, both have to itemize. If one takes the standard deduction, they both have to take the standard deduction. What Mariella was explaining is itemizing is extremely hard, kind of. You have to have like mortgage interest, you gotta have real estate taxes, you only have like 10,000 and then your taxes are maxed out. Out-of-pocket medical expenses, it's a calculation that kills that. Your client is gonna think it's 1-for-1, it's not. Medical is not a 1-for-1 expense. They'll be like, oh, well, I had $20,000 in medical. Well, you're gonna get a portion of that credit. And then, how much did you pay out of pocket? Because that's what we really need to know. Then you have charitable contributions. There are no more out-of-pocket work expenses. So now it's extremely hard to itemize, but there are people who still do. I don't know if y'all know this, if you have a mortgage that's $1 million or more, you no longer qualify for mortgage interest. So that takes you off. So it kind of almost, their goal, I feel like, was to almost eliminate itemizing. And they did a good job of it because they raised the standard deduction and they dropped the ability to itemize. So we don't have a lot of people itemizing.
And then people don't understand that even with those percentages, that's based on your income. It's not just a flat, I did this, or it's 2% of what you earn. And the more you earn, the less you're
The
gonna
less
get that
rate,
credit.
yeah. So it's, you know, we have to be able to explain those calculations.
Schedule B,
Mhm.
for schedule, no, for schedule E, for somebody that has, let's say 2 to 3 houses, then the rental homes, but the income, that's when they get like,
If single 75, it might be different now, single 75, married 150, that was the base amount.
So I
So if they make, if they're single and they make 75 or more, they don't get credit for the rentals, it carries over. They
So I
keep
was-
adding up until they sell an asset.
so I was gonna ask, or, if this is a question, it's not even my time, but I'm pretty high.
We're getting to that though, we got to schedule,
Well, yeah, the schedule E, but at that point, it's not even gonna help the client. Would that be like a chance for them to turn it into like a type of a business? Like, I would like to know how can we handle like a client like that has.
That's what you want to do.
Because of the
At the point where it's not benefiting them on Schedule E, I've turned a lot of clients and said, hey, get you a schedule, and put your LLC and put your properties underneath there. Cause that loss from that K1 can somehow move over. Now, there's still a rental option on some K1s that will still come over and not calculate. So that's a whole nother, but that's a consultation that would have to happen, so that you can walk through it with the client and see what's the best benefit.
I even have like a family member that decided to do that, and now he has like quite a few homes, and he's making pretty good money himself, so that right there is actually hurting.
Yeah, if it's directly on the return, but it's a lot of other factors involved in that, because if the property is in your personal name, technically, you have to do a document to say that it belongs to the LLC. The other thing is, you got multiple properties, but you put all of them under one Schedule C, under one LLC, because now if something happens, even the same way it would be on your personal tax return. So that's what brings us into more like business stuff. And to answer your question, yes, we should probably consult with the client when you see that type of thing. You set up a meeting with the client, hey, after tax season, why don't you come back in, because I think you're missing something. You might could do this differently. So there are tons of options out there. Dependents. This is where all your dependents go. There's 4 lines on the first return. What happens when you have more, it starts feeding to a separate page that adds to the tax return if you were to see the physical page. Under relationship, that's where you're choosing to say that the person is related to you to some capacity. If the child qualifies for a child tax credit, and if a credit for other dependents is available. So I'm not gonna get into the different tax credits and the qualifications and all of that. There should be a class, a CE class that you have to take, I think, that talks about the new rules, and it always goes back and tells you all of the old rules and all of that for the qualifying credits. They feed to page, I think, form 8812. And I'm not sure if I gave you all that. If I didn't, I'll give it to you. But it actually feeds to 8812, and it calculates. So there's earned income credit. That's if you are your income is less than a certain amount and you qualify for that EIC credit. That's different from the child tax credit. Aware? That's separate from that. And then that's different from the child dependent care credit. Those are all 3 different credits. You can qualify for all of them. You can qualify for one of them. You can have a rate that's dwindled down based on your income being a certain amount for one of them. But those are 3 different credits. This meeting is not for that, it's just to tell you that it exists. And so we can come back and look at something like that later. Line 1 is wages, salaries, tips. This is a W-2. The only thing that goes on line 1 is a W-2. Only thing. It says attached form W-2 because years ago, and still today, if you were to mail this tax return off, you'd actually have to mail the W-2 with the form. A little understanding of why. Remember I told you that the IRS speaks to the Social Security Administration? It does, but in spurts. So the W-2s that as employers, if we were doing payroll for a client, which we do payroll for ADP for clients. If we did payroll for a client, we would file form 941 every quarter. That's where we tell the IRS, this is how much payroll this person made. This is the Social Security and Medicare that we took out of their check with their federal withholding. This is the Social Security and Medicare that we matched. Here's your form, here's your money. Each pay period, we're supposed to send the money, and every quarter, we sum it up with that 941. We do that for 4 quarters. At the end of the year, we file a 940, an annual return, which is a federal unemployment. Some states don't have a really good unemployment system, and so they end up having to pay federal unemployment. Texas, we're pretty decent, so we don't have to pay a lot, but we still have to file that 940 annual return. Now in Texas, we also file a state unemployment, like I just was saying, but it's a whole nother form, it's quarterly as well. Anyway, at the end of the year, we have to provide W-2s to the taxpayer, and we provide W-2s to the Social Security Administration. The W-2s do not go to the IRS. Didn't know that, huh? That's why you all had to attach the form back in the day, because they didn't have a copy of it. Now it's an automated system. They're starting to kind of read each other, but yes, prior to, the Social Security Administration gets the W-2s, the IRS gets the 941s. So the IRS collects the money, the Social Security Administration gets the document. So by the time it was time for you to file your taxes, you had to tell the IRS, here's my document that I received that matches up to what the Social Security Administration has. That still exists that way, it's just that now they have an automated system that they use. Yes.
Question, and that's fine. My other question, when it comes to line 1, scholarships, say for graduates, and they didn't use all the scholarship money, isn't that still considered that they have to put that
You're right.
in?
It does feed to it, but it automatically feeds there.
Okay.
Yeah, it automatically feeds there. You're absolutely right. I'm
So if
sorry.
they don't use all the scholarship money,
If they
but they accepted it?
They don't have a choice. I mean, you usually don't have a choice. They give you $7,000. Your tuition was $5,000. That means you got an extra $2,000. That's income.
And you are taxed on that?
Yes. But the best thing to do is just not file it. But see, when you don't file it, you also don't get the part of the education credit that you want. But you don't have to file that credit, which means that you don't have to file that income.
Sometimes those people will use that money for like.
Yeah, can't you use it for like housing or?
You have to put it in there and say that's what you used it for.
There's a special schedule for.
There's a form for that. But if you don't put anything in it, it's gonna go to income. I'm teaching you what's happening. So what you're learning right now is what's happening on the tax return, not how to put it on there. Interest income is on the Schedule B. It could be tax exempt interest or it could be taxable interest. Dividends are also on Schedule B. Qualified and ordinary, and a few other things. But those are mostly Schedule B. IRA distributions. Pensions and annuities. So,
Wait, that's under Schedule B?
no, we're off Schedule B. Schedule B is just interest income. It's line 2B and line 3B.
2A and 3A?
2B and 3B. Look on Schedule 1040.
I am. It says
Look at the
2A.
line. This is 2A and 3A.
So it doesn't
But
include 2A and 2B?
It does, but your line on the return is 2B and 3B. When you see it fall on the tax return, you'll have numbers here, but they're gonna feed for the calculation there. This is not calculated, that's calculated.
So you're basically teaching us how to read the tax return
Yes.
new people.
Yes.
So if a client comes in, then you should be able to know and tell them this is your qualified dividends. Essentially, Blockworks will be totally different ones.
Right.
Because
Blockworks
it's
is gonna,
fairly easy.
Blockworks is, you're gonna enter data.
Gabby, you saying it's easy tells me nothing.
You're gonna enter
You report
data
me
in
in life.
Blockworks. You're gonna enter data into it. You're gonna enter data. When, to be honest with y'all, the people who have not done a tax return yet,
That would be me.
this is hard. That's easy.
This is hard.
The problem is, when I went back and reviewed some of the returns that I saw, I realized that that was so easy that we missed a bunch of stuff. And I wanna make sure we got it this time.
Cause this is like the history and the whys behind
This
all of
is
that.
the what, this is the why, this is the what's happening, why it's happening, where it's going. Cause I'm seeing too many returns where we're just entering data, and we're not, the clients are losing money because we're just entering data. We're not understanding what we're doing, we're just doing some data entry stuff. Once it gets to a certain level, I want y'all to understand, once it gets to a certain level. IRA distributions, someone had a retirement, they, started putting money away in an IRA, and, then they decided that they needed the money. So you do understand, if you don't meet the retirement age and you pull the funds out of an IRA, it's gonna be automatically penalized 10%. Yes.
So anytime you use a schedule, blah, 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 their tax return goes up.
Huh?
When you're, for the pay, like, we're charging more because they have to go through this worksheet. I'm trying to understand where the worksheet comes in. This isn't the tax return, right? This is just a
Okay.
part.
Stay with me. The tax return is one page.
Well, this is 2 pages.
1040.
so-
No, it's one page. So you weren't, so y'all see who wasn't listening, huh?
I was,
Can
but I'm
someone
looking
tell
here,
her-
it says 2
Explain
pages.
to her why it's not 2 pages.
I was probably trying to tell them to turn the air down since everyone wants to cry about the air being so.
If you notice, the bottom of the first page has space, and if you turn around the second page, it has space too.
Yes.
They did it to separate it out. If you literally take off the top and the bottom, it's one page. The tax return used to be 2 pages, but it's literally, you see in 2 pages, but they call it a one-page tax return.
Okay,
Because if you got rid of all the fluff, you literally only have one page.
okay.
Every line consists of something. The lines that are feed on here, they feed, like this Schedule B, line 2B and 2B and 3B, that requires Schedule B.
So does 10C require a Schedule C?
Yes,
So 2B, 3B, 4B, 5B, 6B are all Schedule B?
no, only
You
2.
just said the Bs.
No,
She said 2B and 3B. That's it.
So 4B is not.
See this right here, this attached B,
Well, why is there a
Schedule
B
B?
next to the 4?
No, notice
That's
because,
a different line.
because 2A says taxable interest income. If the client has taxable interest income, you'll fill in line 2A. If the interest is taxable, you'll fill in 2B. And you're taxed on 2B. You're not taxed on 2A, because it's tax exempt
That's
interest.
why it doesn't add up.
What is taxable, what is not?
So the easiest way to look at it is this line over here, this last line, Monique, this last line over here,
Yeah.
this is calculated.
Okay.
These are not calculated. They're trying to get you to where you're at your calculation.
So the Bs over there on the calculated, that means nothing, it's just
It just so happens to be
a B.
a B.
Okay. BB?
So if you look at where you were looking at Schedule C, there's a 10A, a 10B, and your line calculates at 10C. It just so happens that it's 10C.
And it just so
And it happens to be
that's also
Schedule
a
C.
Schedule C. See, I'm getting it.
So the IRA distributions and the pensions and annuities, if you're actually pulling those funds out of those accounts prior to retirement age, you will pay a 10% penalty. You will also pay, whatever your tax rate, you'll pay taxes on that as well. Whether you pay the penalty or not, you still will pay taxes on it. Retirement, or these 401ks, I always say the client should understand what's happening. I think I'd rather pay my taxes while I'm young, rather than to wait till I'm older to have to come off at 18, 20%. I've always said that. But what happens is, or I'd have to put in a plan so that my taxes are paid when I'm older. And that's some advice we should give our clients as well. Because we're trying to avoid tax now, but when those funds are distributed, you're not penalized because you're in retirement age, but you are gonna pay taxes. So if you happen to be in a 20% tax bracket and you 70, you paying 20% on that money that you put up a long time ago. At a higher tax rate, to be honest with you, because the cost of living has went up. So, those are things that we should suggest to our clients to go talk to their financial advisors or whatever on plans for that. Or, I know when I did my 401k, I did part of it taxable, part of it non-taxable, so that I could have a mix and I wasn't paying a bunch of taxes on those funds. But, when your client comes in and you put that in and they wondering why they paying so much, they did not reach retirement age and it's penalized. Now, you can there are usually reasons why you go get the money. If you're buying a new house and you have a 401k, they could say that and you won't be penalized for that. You're sending a kid to college, you won't be penalized for that. Those are things you won't be penalized for, but they have to know that before they release the money. Courtney, what's that look?
Y'all say something, I'm trying to make sure I'm not crazy. Schedule C income will come up on line 8, not 10.
Where?
Line 8, where it says other income, schedule 1, line 9. That's where your schedule C in your,
I wasn't even looking at the lines, I was listening to
oh, well, see,
Nick.
Nick was saying different lines, they caught me off. I was like, wait.
Hey, you said ask questions.
I was like,
You
wait,
said ask
what?
And I'm just talking,
And my
because
face
I'm
was
thinking
like,
that it was down there, I didn't even look at the numbers.
Okay, just wanted to make sure I was going crazy.
Moral of the
Okay.
story is ask Courtney.
Anyway, 6A,
So
social
when I
security
do this
benefits.
return wrong, blame on me.
You should have
Okay.
been saying that. 'Cause I wasn't looking at the lines, cause she was like, but it's 10C. So is that, no, she said the schedule C is on 10C. I said, that's a coincidence, cause that's
Okay,
not,
okay.
but you right. And that's where the
What is she
schedule
right
comes
about?
into play. She's saying that, we gonna get there. Matter of fact, you shut up and let me know the part of how I'm doing
Did
this.
she not say ask questions until you're
Yeah,
moving
don't
the
let
face?
it stay
Did she
in
not?
line with my numbers, okay? Let me go down my numbers, right? So the tax return, again, has changed over the last couple of years. I used to know this stuff the numbers off the back of my head, 'cause the tax return has been the same for so many years, but they've changed it, so a lot of stuff is different. Schedule C used to literally be listed, see how Schedule D is listed on the line? Schedule C used to be listed on the line, now it's actually inside of Schedule 1.
Yeah.
But,
Oh my God.
anyway, Social Security benefits. So, Social Security benefits are not taxable unless you make a bunch of other money
Yeah,
and
unless you
then
have other
it starts
income.
being taxable. So if you have a client that comes in and they only have, the Social Security, they're not required to file taxes. Some elders will come in and they don't care what you say, just file their taxes, cause they just wanna say that they filed, it's gonna say 0, but they wanna file it. Our senior citizens get a base rate tax return for free. So as long as it's $59, they get it for free. If, we do a full return and it costs more, we credit the return $59.
I thought it was 69.
The base return is 59 this year.
Courtney giving you
What?
a look.
No, it was 69.
It was a 69?
Mhm.
I'm off a year?
Yeah.
The whole year.
It was 59 last year when I started.
Oh, that's
But
what
this
it was.
year, it was 69.
Okay, that's how many tax return basic ones I did. Yeah, all right. So, Social Security, if they come in just with that document, it's not taxable. But if they have like a pension
Yeah.
and the 1099, and the Social Security, it's likely some of the Social Security, depending on the amount, may be taxable. And it's taxable, that when they may come in and say, well, how much of this is gonna be taxable? Not sure until I put it in, because it depends on how much of the income you have. It could get to the point where all of it is taxable.
So, Bertie had this client,
Yeah, I think so.
Brady had this client that was trying to argue him down, saying that she doesn't have to file a tax return to get her stimulus. Remember that client, Brady? She was like, I'm just like, she held you on the phone for an hour when I was there. She was saying that she shouldn't have to file to get the stimulus.
No, she was likely trying to, well,
You remember the lady?
I'm speculating, but I'm gonna go out on a limb and say, it wasn't that she was saying she shouldn't have to pay to file to get it, right? Not that she shouldn't file, you have to file, everybody knew that. They thought that we were gonna do them for free, so that they can get their stimulus payments.
When we get people like that, we just have to remind them that this is a for-profit company.
Yeah.
Right.
Mhm.
For profit.
Well, yes, because they come in and they think that they can get it for free, and I do tell them, well, this is a for-profit company. I mean, if you want it for free, you can just use the IRS system.
Yeah.
If it's just,
I mean,
for the
that's
stimulus.
That's what I say. I said, but how much? I said, well, we're paid preparers.
Right.
That's all you have to say. I'm sorry, this office is paid
You
preparers.
know, we say that we're contractors, we have a responsibility.
Yeah, that's fine. And we're paid preparers. You're welcome to go down the street, and they may do it for free.
Oh, that's my favorite phrase. You can go to the corporate office. You can try the corporate office.
Line 7, so, line
I have a
7,
question, though.
okay, go ahead.
So, people who receive, Social Security disability,
Mhm.
I don't know if it changed or not, but wasn't it once upon a time where they were under a certain age, they
Nine.
would go up
They could,
to line 7 wages?
say it again?
It would go up, it would go up to line 1 in this case for wages, Social Security disability,
Oh, that depends on.
like they
not-
got it for working
Yeah.
account or something like that.
Until they can jump retirement.
Oh, so that's not, so you have an insurance claim. And in the insurance claim, you're being paid, wages in the time that you were unable to actually do the work.
But they usually
But it
issue a
was coming
W-2
to
for
Social
those.
They issue, that's what I was about to
Oh, they
say.
do? Oh,
Yes,
okay.
that's what I was about to say. Since they're compensating you for work, that's technically income. So people will come to me and say, our insurance claim is taxable. Insurance claims are not taxable if you're paying for medical or pain and suffering or anything like that. But if you're paying for the time that the person was out of work, that's income. Because that's why you're paying it, because the person wasn't able to work. So they will send a W-2 for that.
With the J, I think,
Yeah,
it's a
or
code
something
J.
like that. Capital gains, line 7 is capital gains, or losses. Those feed to Schedule D, and you can check out your Schedule D. Capital gains, and losses are mainly the sale, of assets.
Cryptocurrency.
Cryptocurrency
Anything
means
about-
that.
Yeah, but how is it gonna be treated? Because we have to
It's like
put it-
stocks, like when you know how to do the stocks,
You're gonna
you
force it in
received it
again.
on this date, you sold it on this date, when you got it, it was this much, when you sold it, it was this much.
But we still have to force it in the.
The IRS is requiring, some people to have some type of statements now, this as of this year,
So the
2021.
cryptocurrency, I pay taxes on it after I sell it, is that what you're saying?
Yeah, well, you
It's
have,
just really
capital,
like
I was about to explain how capital gains and losses work. You receive something, the easiest thing to discuss it in, because most of what we're gonna receive is probably people who have trading, they have like stocks that they're trading. So you'll have, on this date, I purchased some stock, and on this date, I sold it. Short term is anything that's 1 year, so January 1 through December 31st, or May the 15th through March the something. If it's under a year, it's short term.
The only thing is that their statements are a nightmare, because, if you get like the broker statement that you usually get at the end of the year for like regular stocks, it will show you like the list for the short term and then the long term. For crypto,
Yeah.
as soon as they come in, I'm like, oh boy, that's for crypto.
They,
And then he'll turn around and say, that's for me.
they're trying to get that under control, but it's gonna be a little difficult. It's gonna be a while before they actually really work it out. Last I talked, they were trying to force the companies who provide it to offer statements. But the answer to it, was, like, one of the questions was, who's responsible for giving you the statement? It's not the company, it's the person who's receiving and doing the currency. You're responsible for making sure you have some type of statement. So you could pay another company to do it, you could try to do it, but you're responsible for tracking it.
Which is gonna be a mess.
Yes.
The guy that
It
you,
was since last year, if we didn't have any clients like that.
the guy that you,
Yeah,
that deals with a
yeah,
lot of
yeah,
the
yeah.
currency, your friend, are we doing his taxes?
Who?
The guy that he makes a lot of, you were telling
We
me about.
have several clients. We have a client that actually, makes has the machine, he's mining. We have two
Oh.
clients that's mining. So we have every angle of that client.
Those are your people, your tax returns, right?
Yeah, I don't, nobody would be able to do that right now. I'm struggling with it, so I wouldn't give that to nobody to do right now. But the basic capital gains and losses, y'all should be able to do.
Yeah.
Maybe just a slightly complicated question, I don't know, like, let's just say that you purchase a certain amount of cryptocurrency, or stocks or whatever, and then you don't sell it, but you kind of shift your assets around, and then like, let's say I started off with like, I bought into 7 or 8 different ones, not knowing which one I really liked the best, and then after like looking into it more, I shifted 6 of them into just 2 of them.
Any movement, if it was generating or losing, you want to track. Because even if you lost money, you still want to track it, because you can take that loss.
The difference with crypto is that you don't necessarily have to sell, you can just trade it for different coins. So versus,
Once you trade it, it's a transaction.
Yeah, it's a transaction.
Like if you take it, if you had some cryptocurrency in your account and you decided to buy a dress online, that's a transaction. Whatever the difference is with that, you pay taxes on it. So it's the movement of it. So if it goes in your possession and out of your possession through any transaction, that's when it's taxable. If it's moving from one place in your portfolio to another place in your portfolio, as long as it didn't gain or lose anything, you actually did nothing. There's a whole class on that too. I'll show you where it is. Anyway, but capital gains now include digital currency. People come in and if they're day trading, they have tons and tons of transactions. I'm not putting all that in. I just do short term and long term, but I'm sure, they may get audited for that. I don't know. I call myself just trying to make sure it calculate out right. And if
Well,
it calculates out right,
some
I go.
companies, Coinbase does show like dates.
I'm not talking about coin, I'm talking about regular trading, when they have, I have a client right now and I'm behind on their return because it's $23 million worth of transactions in and out. It's like 100 and something pages of transactions.
A couple of clients that we had to attach the statement.
Well, I just attach it like.
So like you say, short-term, long-term, and then we attach the statement.
The only problem I saw was with Melvich, they don't really add the base price for some of the stuff in that.
So long-term transactions sometimes have that issue. When you have a client with a long-term transaction, they have to go get their costs. I used to look that up for them and I stopped that because it's an act of Congress, but you can go back and see, the history of that stock at a certain date, but I just tell them how to do it. You can Google it now, I used to have to literally go back and research that stuff. But anyway, that's, the capital gains and losses are stock, digital currency, the sale of businesses, the sale of a commercial piece of property, the sale of a residential piece of property for real estate purposes, anything that you're, sale of contracts, anything that you're selling. You bought it at some point and you sold it, and then you did it with the intent to make some money. That's a capital gain or loss.